Morning everybody, and this is your Dow Jones day trade setup for today. So yesterday was a pretty good lesson in how the market responds to expected news. So we're expecting inflation to be higher. It was slightly higher, and the market reacted in a flat panic because now the Feds are going to increase interest rates. But the Feds have said they're going to increase interest rates for the last 2 months now. So anyway, it's just the way the market operates. So if we look at the charts itself, remember yesterday I was really not convinced that we had an opportunity to buy just yet. We had oscillators grip the upside, and we're breaking through levels, but we weren't coming back to test them. And now we've had this pretty big sell-off yesterday. I'll just give you a view of that. So we're down 2% at the moment. So not massive, but fairly big for the day. And we've got to cross over the oscillators now. So double top on the oscillators. I would expect us to start looking for a level now. And I don't know how long this is going to continue. I don't think the Feds or institutions are going to keep this going. Head and shoulders is still in play. The inverse head and shoulders. There's your shoulder. Here's your head. There's your next shoulder. Still very much in play. Only once it drops below this area do we have a problem. One thing we do have is a break outside the channel at the moment, and we had a close last night out the channel as well. So getting down to the 3 hour, you can see this week has been big up, big down. So we have a weekly pin bar at the moment. It is what is it? It's green at the moment. Actually no, it's not, it's flat. Yeah, it's perfectly flat. So at the moment, I look at the oscillator starting to creep back to the downside, right back here where we were finding support in the beginning of the week. And I think it's well worth putting, if I just use the right tool, it's well worth putting the level in there. It's 35.075, and then I'd actually go as far as to say it down there, 34.96. So 3,500 is definitely what the bulls are looking at the moment. Now, just a hint, it's probably worthwhile getting onto the futures market and having a look at what the open interest is and seeing what where those closeouts are for February, because I pretty much guarantee you that that's kind of where we're going to hover for the next 2 weeks. Anyway, if we go down to the hour, you can see nice trend to the upside, and then a bit of volatility here, tail to the downside, tail to the upside, no real indication of which way it was going, and then we just started breaking through levels again. So we're looking for a level of support, and this is a fairly interesting scenario brewing at the moment. 3 pin bars like this, or range bar 2 pin bars, but anyway, 3 tails on a very strong level to the left. I would expect a bit of a bounce here, probably to come and test this trendline bracket 35.364 before attempting to come back down here again. Could be bottom of range forming, or it could be a double top forming. So depends which way you read it. My opinion on this is we know what the Feds are going to do. So this is all just knee-jerk reaction to the data. But the reality is the market already knows what the Feds are doing, and they're already rebalancing and sort of repositioning their portfolios. So I'm not entirely convinced either way. I'm not convinced for a bull or bear market at the moment. So kind of just sitting on the hand still. I don't see an opportunity here unless this starts breaking the upside. So the way I would play this is on the 15 minutes, you're going to see the structure, and the structure is going to be quite, I'm just going to use a smaller level here. The structure is going to be something like that. So I'd want to see a break and a retest of this 35.166. My stop area is down here. Small position, not really willing to risk too much, with an opportunity to move back the upside, and probably looking at this kind of scenario here. So either 35.371 or alternatively 35.460. So your risk should be fairly low. Your reward, I'm not going to say your reward is going to be high, because it's going to be a 50-50 call. It could just pop above here and then drop down to the next level and stop you out. So, which is why I would keep my risk extremely low by using a small position size and as tight stop loss as possible. That's the only scenario that I can see playing out at the moment on this. But we need to wait for the European Open to see if that's going to transpire. Anyway, really looking like a sit on hands day for me again. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.